Hi there. This is Sonia Curtis with S. Curtis Properties, real estate broker from Los Angeles, California. Just wanted to do a quick video update on the current market conditions that we're in. You may have noticed, if you're a seller, that properties are staying on the market a little bit longer. The price that you thought you could get, that you could have gotten last year, maybe you're not getting as many offers right now. They're certainly not coming in as high, and there aren't so many multiple bids as there were last year. That is largely due to the fact that the interest rates have really increased. And consequently, what happens is the buyers who used to be qualified, let's say they were going to buy $1 million property last year and they were going to put 20% down, they had 200,000 in savings because they sold another house, whatever. And this is LA market, by the way, because we have homes going into the hundreds of millions of dollars in the surrounding LA area. In the general US of A, $1 million might be a very steep price, but it's just an example. So let's say you're the buyer and last year you were qualified easily for $1 million purchase, putting 20% down. With the interest rates going up 3%, 4% from last year, now their monthly payment, their monthly mortgage is going to be so much higher that they're most likely priced out of their budget due to their debt to income ratio, or just what they're comfortable with. Even if the bank would say, no, you're good, your income is good, you can pay this much, we'll give you the loan. A lot of people just don't want to pay that much for a monthly mortgage and be house poor. So that's what's going on. And the debt to income ratio, in a nutshell, the lenders will go over that with you, but it's basically like whatever your monthly debt is. Let's say you have outstanding medical bills, so you have a monthly payment on that, and you have credit card, and let's say you have a school loan for your children or yourself. And then you've got your housing payment, your total housing payment, which would be making up of principal, interest, mortgage insurance, and mortgage. So it's all, I'm sorry, principal, interest, insurance, it's PIMI, and interest. Okay, so you add all that together as your monthly housing payment, plus all your outstanding monthly debt. So that payment has to be, usually it's about no more than 40% total of your total income. So that's why lenders are going to ask you for all these personal information, your savings, your income, your proof of income. So anyways, and then your proof of debt. They'll pull your credit report. So if you want to buy and you're in the market and you're excited that the prices are coming down, but you're not so excited about the fact that the interest rate and your monthly payment went up, one strategy is to get your FICO score raised if that's an issue, so that your interest rate will come down, because the banks will give you a better rate with the higher FICO score you have. So work on that, work with someone, or just get your credit paid down, pay off credit cards, pay off debt. If you have any things in collections, get that handled ASAP so that you can raise your credit score. Once your credit score is raised, then you can get a better interest rate. Also, you get a better interest rate the more money you put down on the property. So save, So those are just two tips. And if you're the seller, you just, in my experience, even in a buyer's market, sellers will eventually, if they're really firm on their price and they've done a lot of improvements and it's a really clean house, or what we call a turnkey house, they usually do get what they want if they wait it out. Depends on your situation. You may not want to wait it out. Plus, if interest rates go up even more, you might have to wait a long time, or take your house off the market and then relist later. So just things to think about. And as a buyer, also another thing to think about is your monthly payment may not be that much higher. So don't immediately just get intimidated by the raised interest rates. Talk to a mortgage lender. Talk to somebody really good. I have somebody excellent I work with. If you want, just message me and I'll give you their info. And they can run your numbers for you, because you don't want to just run away from it thinking it's not a possibility, because it very may well be a possibility for you. Okay, that's it for today. Thanks.